Amazon stock coming under pressure as the FTC in 17 different states are suing Amazon for antitrust, saying, hey, you are an illegal monopoly, abusing your power to inflate prices, degrade quality, stifle innovation for consumers and businesses. What does this mean for Amazon stock? Does the lawsuit have any merit? I'm going to cover all that and more in this video. If you enjoy educational investment videos, you're watching Unrivaled Investing. Appreciate that thumbs up, that subscribe button. My name is Daniel. Let's dive right into the latest news on Amazon and this record lawsuit from the Federal Trade Commission in 17 different US states. So the first key part of their argument is that Amazon is pursuing anti-discounting measures that punish the merchant sellers. So if Amazon discovers that a seller is offering lower price goods elsewhere, keep in mind this is straight from the FTC site, Amazon can bury discounting sellers so far down in Amazon search results that they become effectively invisible. So this has actually been a story that has been circulating around Amazon for several years now. You can see the Bloomberg article from 2019, Amazon squeezes sellers that offer better prices on Walmart, talking about how Amazon began sending these price alerts in 2017 to merchants when, you had this increasing price war between Amazon and Walmart. And the typical alert said, one or more of your offers is currently ineligible for being a featured offer on the product detail page because those items are priced higher on Amazon than at other retailers. And so what they're saying is, look, you won't have that buy now functionality where a user can quickly just click, oh, I just want to buy it right now. And it makes it harder to shop, or they put it lower on the page. I view this as saying Amazon's looking to lower prices by saying your price elsewhere is cheaper than what you have here. You need to lower the price that you have on my website. That is not hurting the consumer. Yes, that would hurt merchants because they would ideally make more money. But the whole point here is you're trying to encourage, you're saying there's monopoly power that's hurting the consumer. This is an example of putting pressure on merchants to make sure they have the lowest prices on Amazon. That's effectively what they're saying. Like, they want to encourage lower prices. And if you have lower prices elsewhere, then Amazon's like, yeah, we're not going to recommend it. So far, I'm thinking this is favorable from a consumer perspective. Okay, so another argument that, quickly I'm looking at this. I was already skeptical of the rumors and then actually seeing what the FTC is actually complaining about. And the odds of this getting serious traction in my mind just dropped down significantly when I look at that. So then the next possibility, okay, their second key argument is that they're conditioning sellers' ability to obtain Prime eligibility. Okay, so a lot of people on Prime, tens of millions of users, where it's much easier to shop if you're a Prime user. And if you don't have Prime, then, it can take longer to get an item to you. And they're saying, well, having certain items with Prime eligibility so that it can be purchased, and get that quick shipping is only tied to sellers. So they really encourage sellers, some merchants, once again, to use Amazon's fulfillment services. And so, a merchant won't be able to get that Prime eligibility unless they're using Amazon's fulfillment services. Okay, I understand that argument. My alternative take is like they're investing tens of billions of dollars in infrastructure. And keep in mind, I don't really have a horse in the race on this one. I don't have Amazon as a top position or anything like that. I don't personally own Amazon stock. But I look at this and I'm thinking, this is just so misguided in terms of what the US government's doing. Like the first one about raising prices, that's not the case. If anything, it's encouraging them to lower prices on the Amazon platform. The second case is like, Amazon has invested tens of billions of dollars in infrastructure. And yeah, in order to get eligibility, Prime eligibility, you need to use their fulfillment services because otherwise their investments in these fulfillment services aren't going to be worthwhile and they're going to stop investing in them. So they're encouraging merchants to use it. Yes, it squeezes the merchants a bit, but it's also like, hey, if we don't make these investments at all, then you're not going to have same day shipping or next day shipping. And it goes back to like when COVID was happening and people were hunkering down, 2020, one investment manager, Stanley Druckenmiller, he's like, thank God for Amazon. He literally said that. Like, You compare that to the government's take on this. It's just completely backwards, in my opinion, relative to like the reality. The reality is, thank goodness that Amazon has made these investments for society. Society is better off. The U.S. government is going completely the wrong direction on this take, in my opinion. If you have a different opinion, I'd love to hear it in the comments below. But they're saying, look, Amazon extracts enormous monopoly rents. So you're going to see huge fat profit margins. They're degrading the customer experience with junky ads, and they're encouraging Amazon's own products over ones that they think are better quality, and that sellers currently have no choice but to rely on Amazon to stay in business. And so my view is like, you look at this, think about it. If they're truly, offering products that people don't want, and they're truly encouraging an Amazon experience that is worse for the consumer, I would expect sales to start dropping because consumers would find alternatives. Amazon does not have a monopoly. They do not have over 50%, e-commerce market share in the United States. They don't have 75% or something like that. They do have a large chunk. I think it's around 40% in the US, but it's not the only option that consumers have for goods. But if you want to get things in a timely way, they have built that infrastructure. Look at their actual financials. Think about if consumers are actually seeing junky ads, where it's like, nah, this isn't worth it, or the Amazon product's not very good, their sales would start declining. Fewer customers would go on the platform. So you're not seeing that. You're seeing revenue growth around 10% this year in terms of sales, but you're seeing operating margins last year were negative in their North America retail segment. Their international segment is still negative. This year, they're having really fat margins of 2.6%. So the government's saying, oh yeah, enormous monopoly rents. What are you smoking? That this 2.6% is not enormous monopoly rents. Last year, it was negative. Are they expected to have losses each year going forward? I mean, this is just bananas. This is absolutely bananas. This claim like enormous monopoly rents. To even write that, it's just you've lost all credibility, in my opinion, looking at this. Like completely going after the wrong things. Like one object that's very clear monopolistic power is the Apple App Store. That's an example of something that's just ripe for the US government stepping in and saying, wait a second, you force every app to charge, effectively pays 30% to you or 20% plus. Like, does that really make sense? Should you really keep that going forward? This 2.6% margin, customers that increasingly like it and spending, more on the platform, I don't see this as monopoly. This isn't, over my shoulder, I have a copy of, under my armpit, you have a copy of, looking at the Titan. You're looking at oil production. You're looking at, John D. Rockefeller. And did John D. Rockefeller operate with 2% margins? No. He had really fat profit margins on his refinery business because he crushed it and he did have a monopoly. This is not monopolistic, pricing. Now you might say, well, wait a second, Daniel. There's a lot of investment that is going on here. And that's the reason why I said their profit margins for like their ad revenue would be much higher than that. But my view is, well, what are they investing in? It's not like this is all going to the Jeff Bezos needs a new yacht fund. This is going into Amazon exploring new ideas to like, hey, how are we going to, maybe there's a new grocery concept. Maybe there's a new, pharmacy concept that can help consumers. Maybe we're going to invest more into video content on Prime. Like that's what it's all going in here. So I don't view these margins as suggesting, oh, this is monopoly power at all. So, but will the government intervention, lawsuits from 17 different states, will this crush Amazon stock? First, in full disclosure, this is not financial advice. Also, if you're looking to take charge of your investment journey, consider unrivaledinvesting.com for compelling investment ideas, real-time portfolio updates, and our exclusive Discord server available for premium annual subscriber. By the way, I'm going to be raising rates shortly, so now is the time to lock it in. Thinking about Amazon stock, I do a quick check at AI Ticker Chat. First month is free to think about leveraging the power of artificial intelligence. What can the stock do in the years ahead? And it uses the latest cutting edge AI to project revenue growth, operating margins, potential multiple 5 years out. And it's saying, yeah, not that great. Maybe 50% upside, maybe 50% downside. That is not the most compelling type of setup that I've seen. And that I personally own things that I think are much more compelling. And this is just a quick take from AI Ticker Chat. This is a starting point when you want to think about it. Maybe you think long-term margins go a lot higher than 5%, or maybe their growth rate's a lot better than 7% over time. You can just change that yourself if you're interested, in tweaking how that would look. But this is using their cutting edge, AI predict feature. And overall, I look at this and I'm thinking, it's not crazy compelling. But another way to look at it is just by looking at their AWS segment. So Amazon Web Services. Amazon Web Services continues to do really well. It's the #1 cloud in the world, continuing to grow at a teens rate. The other players like Microsoft and Google are taking share. They're growing faster. Microsoft Azure, Google Cloud. They're growing faster, but still, AWS is still growing at a good clip. It's still profitable, though the margins are heading closer down to 25% versus their previous 30% plus. But I am penciling out a range, let's say over the next 5 years. And over the next 5 years, let's assume they grow 12 to 18%, a wide range on an annual basis. And because this utility type nature of this business, let's assume a 25 times multiple for it, give or take, maybe 23, maybe 28 times. Keep in mind, this is a hypothetical valuation framework. Of course, Amazon stock price can go way higher, way lower. But looking at just this core segment, AWS, which is where the bulk of their profits come, you could say this is the equivalent to being worth, over the next 5 years, 50% of Amazon's market cap to over 100%. So in the high case, you're effectively saying there's negative value in their retail segment. In the other, in the low case, you're effectively saying half their value comes from retail. So if there's a situation where retail comes under pressure, and there's no way this lawsuit helps Amazon, this is going to be a distraction for business. That it's important to understand that there's a reason why Jeff Bezos, if you look up pictures, there's pictures of him like snapping pictures of his wife on a yacht somewhere, like paparazzi's like, oh, let's look at Jeff Bezos enjoying his best life. He knew this was coming down the pipeline, and he was like, these government bureaucrats are so stupid. That's what he's thinking. He's thinking these are a bunch of mental midgets, and I don't want to waste my time with it. And so he's like, forget about it. Peace out. I'm going on a yacht. I'm going to go enjoy my life. Andy Jassy, this is on you to deal with this. So that's what he's doing, because he knows this is a bunch of nonsense, but it's going to be distracting. It's going to be incredibly annoying. I personally look at this and I think it could come under pressure. If you start seeing, some margin, hit because of this in retail, where they start having to walk it back. And I also think there are just better plays out there. That said, I do think, in the last 48 hours, there's even more exciting headlines with Amazon, such as their $4 billion investment in Anthropic, where they're trying to be one of the cutting edge players in the AI space, with LLM. And Anthropic, I believe, owns Claude. And they're trying to come up, Claude is trying to be this new cutting edge artificial model that they think could start teaching itself how to become a better AI within the next year or two. So they think this is just world beating stuff. So if they're successful, with this $4 billion with Anthropic, like it might even be pointless, like this pressure on retail. I mean, you could have, instead of Alexa being like, not very good, you could have like the super genius in your kitchen that you can actually talk to. And you are starting to see signs of that with OpenAI, and they have some news that now they have a conversational model that's, visual and audio, so you could be talking to it, and it's like a game-changing experience. So I look at this investment and I view Amazon as a contender of having one of the leading AI models in the years ahead. Microsoft, clearly, because they have an investment with OpenAI. Google, clearly. I look at Apple and I'm like, Apple, what are you doing? Where's your model? So if there's a company here that's in trouble, I would think, Apple not having a contender in the AI space, which I think is going to be a game changer. I like seeing that Amazon's, making this investment. I think it's very clever, especially because it's then going to be something that gets directly linked to AWS and all the customers there. So I view them making intelligent investments that are going to support AWS over time. Overall, the takeaways, as I think about Amazon, one, it's still a $1.3 trillion company. This is harder to compound than, let's say, finding, a smaller company, a $300 million company, a $1 billion company that you see as faster growth rates and lower valuation. And I call out those types of stocks, to my subscribers at unrivaledinvesting.com. So I think it's just easier to compound with other things. The other key component looking at this is it's worthwhile to remember Microsoft. Microsoft previously had to go through their own antitrust, lawsuits. They ultimately lost, then repealed. It was just a headache for them. It was a headache for their operations. It was a headache for Bill Gates. And, I think that partly encouraged him to get out of there because he's like, once again, don't want to deal with, nonsense lawsuits. And it was a huge distraction for the business. And during that period, Microsoft ultimately reached a really low valuation, around 10 times earnings. So I think you could have that sort of period where Amazon's core business gets under pressure from these distractions, from these lawsuits, and then you ultimately get a much better value in the future. And I also look at the valuation, as I showed with AI Ticker Chat, and I suspect you could get a much better value in the future. I think you can find things with much better upside potential than with Amazon. Personally, that's my take. If you have a different opinion, I'd love to hear it in the comments below. You've been watching Unrivaled Investing. Thanks so much for tuning in.